Welcome everyone. This video is about question 35 of ICAP question bank. We will solve this question in accordance with latest tax law for tax year 2023. Please read the question carefully. You can pause video to read it. Please note that the taxpayer in this question is an individual. Mr. Akram. After reading first line of question, you can infer that the individual is resident person. Have a look at requirement of question. You are required to compute two items: taxable income and tax liability. Answer is required under two scenarios. These scenarios are about selling price of shares. Your answer format will look like this. Fill in some basic information like name, type of person, residential status, and tax year. Make your first working on a separate page. For each head of income, you must create a separate working on a separate page. First information is about annual basic salary. This is fully taxable. Mention it in your working. Rupees 1.5 million is fully taxable. Remaining information in question is about employee share scheme. Company offered 5,000 shares under employee share scheme. This option was not free. Akram had to pay a cost of rupees 1,000. Thereafter, he exercised the option and obtained shares by paying exercise price of rupees 50 per share. Total exercise price paid was rupees 250,000. On the day when shares were obtained, the market value of shares was rupees 70 per share. So 5,000 shares were worth rupees 350,000. According to section 14, rupees 99,000 will chargeable to tax under salary income. Mention it in your working. This working is complete now. Let's make its total. Total comes to rupees 1,599,000. Next information is about disposal of shares in two different scenarios. In scenario A, shares were sold for rupees 90 per share. In scenario B, shares were sold for rupees 40 per share. Let's make a separate working for capital gains. Mention consideration amount by multiplying number of shares with selling price per share. Recall notes slide. Let's first discuss how capital gains will be calculated here. From disposal value first deduct consideration paid to acquire option in shares. Recall our previous working. Option was acquired for rupees 1,000. Shares were acquired for rupees 250,000. Mention these amounts in your working under both scenario A and under scenario B. Next is to deduct amount previously included in taxable income. Recall your salary working and look for the amount which was already included in income. Rupees 99,000. Mention it in your working under both scenario A and under scenario B. This working is complete now. Make totals under both scenarios. There is capital gain under scenario A and a loss under scenario B. Please note that these are shares of a listed company, which means that it is a public company. Share of public company are included in definition of securities. This gain or loss is a separate block of income. Both workings are complete now. Mention their totals on main answer format. Also mention working reference for convenience of examiner. Calculate taxable income. Please note that capital gain or loss from securities is a separate block of income and shall not be part of taxable income. Loss from securities cannot be set off against salary income. Now we need a rate of tax. Tax rates are given in exam. Third slab is applicable here. Using this tax slab, make your working under both scenarios. Tax imposed comes to rupees 64,875. Now calculate tax on capital gain. Rate will be given in exam, so no need to memorize it. Applicable rate is 15%. Tax imposed comes to rupees 15,000. Due to loss in scenario B, there will be no tax calculation for separate block of income. Find out tax demand under both scenarios. Rupees 79,875 under scenario A and rupees 64,875 under scenario B. Congratulations! You did it! Your answer is complete now. You can ask your questions in comments section. See you all in our next video.